All right, good morning. Let's get going here. All right, so yesterday was the impeachment rally. Depending on which side of the political argument you're on, I guess whenever you can say it was to your benefit. Anyway, we got the turnaround day. Not without a jiggle. Remember from yesterday, the pre-market conversation, we talked about this W bottom that had formed here and the potential for that to hold in this area, the area of the prior low, which we looked at right there to say, okay, is this the area where it's going to hold? And so that there was a wiggle, before the actual turn. There's a lot of uncertainty in the market. And, once it looked like it was going to dive lower, you got the big wide range bar reversal day yesterday. And from there, it was just the normal stall, which, this point in time right here obviously could have went back down. So how do you deal with something like that? Well, two things. First, we have to make some assumptions when we look at charts and multiple time frames and such. And one assumption is that when you have a shock pattern like this bar right here, let me get my little dot out here. When you get a shock bar like this, where it broke below the lows, right? We had the W bottom, you got the red bar reversal. So when it had tried to go up, we really don't know whether a W bottom can get through this high or not. And after this type of an igniting move to the downside, it does have lower odds of getting through without a jiggle or some sideways consolidation, because this is pretty powerful. So after this breakdown that failed, the size of this bar right here, first of all, the beginning of a shock, we don't know it's going to reverse when it breaks lower. But after the fact, we see that it's actually reversed, and it's a big bar. Not only is it maybe not quite the textbook of a bottoming tail bar because the tail isn't maybe long enough, but, good enough for government work, which is pretty sloppy. We get a bottoming tail bar and a big green candle body engulfing these prior bars. So now we can make an assumption based on the failure and the size of the reversal that it can get through here. So with that bias comes with a belief, not a fact, a belief that a bar like this, topping tail bar, while it could pull it back a little bit, it should be ignored to some degree, meaning it shouldn't create a failure of this reversal. So how do we deal with that? Objectively, systematically. That's what MTS is based on. And it starts with, well, where's my first reference point of support in this time frame? The prior bar's low. So if it breaks the prior bar's low, which is this bar, it opens up the possibility of a deeper correction. And it could jiggle around like this and turn back around, but we're looking to see if it could at least break a prior bar's low, because we're going to give a certain amount of respect to the topping tail bar. It is at resistance. Then on the next bar, it doesn't happen, and so we figure we're safe, or we should be off to the races. And you can see it pushed higher, topping tail bar. It's in the middle of nowhere, as this chart. Now, we didn't look at other markets as we do, compare, are they at resistance? And, so why we look at all those, the NQs and the Russell and the Dow, because if they're at resistance, that can have an effect. Or, it's just, it's getting toward the end of the day there. It's 3:00. In any event, this was a bullish type of pullback. You can see the angle that it retraced. That's what we call a bullish angle of retracement. Comes into the breakout area, bottoming tail bar, red bar ignored. And so you see what's happening here right now. So the reversal here is now retraced, I'd say a little bit more than 50% into the red bar. And it's, while still in an area where there's this void here, it's just the eyeball kind of arbitrary place that we look at and say, well, if we can close more than 50% into that bar, that's a really great start to negating it and a possible turn. So we'll see that actually happens here today. Since this is now moving up, the momentum has slowed down as far as the turn and the move up, meaning, so this momentum, the pullback, and now, as you know, we explained in the past, the distance between the highs here is smaller, or you can get this move is greater than this move. Doesn't mean the trend's going to end, right? But an explosive kind of move, like with, let's just relative to this time frame, a lot of times this could have moved all the way back up here, and then the momentum begins to slow at resistance, whereas the momentum is slowing here, again, in the middle of nothing. There's some, I guess we could say, minor resistance, which would, I guess, be this area right here. In any event, when we look directly to the left, there's nothing. So momentum is slowing down. And now, can it hold this low? And ideally, it won't retrace. Let me get rid of the lines here. It won't retrace, a little further than here. Ideally, this is what we call minor support, because we're going beyond what's directly to the left. So it's what many will look at as a reference point. We'd have to go down to the 5-minute to really see what's happening here or here. We don't have time. But anyway, the further that this retraces, if it should, down to here, the more this trend becomes in question. So that's what we're going to be looking for at the open, as to whether this can actually hold, let's say, around this level here of 29.85-ish, and it can open up the door to continuing to move up toward that resistance. And if it can do that and come up here, well, then, of course, the question becomes, can it hold on to it into the end of the day? And like, it doesn't have to do this in the morning. This could, do its gyrations throughout the day and then try and rally later in the day. So who knows what's going to happen over here? None of us do. We just know what has happened over here. And based on that, to continue this, it should not come down here, obviously. It should go sideways at resistance, or have let's clean up the screen again, or have like a red bar ignored and a green turn right back up again. So bar by bar analysis allows us to objectively monitor what's happening in the moment and putting that within the context of a bias of what preceded it. Let's move on. And so with that information, we can apply it to anything, right? And what it's doing. Pretty much the same story. Wiggle, up, pull back up, slowing momentum. It didn't quite get above that resistance area like the S&Ps did. So this continues to show some relative weakness. Pretty common sense stuff when you start looking at it in a systematic way, a consistent way. And part of what we discussed in the green room yesterday about the analysis being consistent. When your analysis flips from, oh, I'll use this moving average versus that moving average, or I'll use this method of analyzing support and resistance versus that one, or the trend, and so on and so forth, you get brain damage and you're confused. Once you have a method that you've looked at in the past and realizes its pluses and minuses and nothing's perfect, but it's pretty darn good, you gain confidence in the method and you're willing to do it on a day-to-day basis, and what Dan and I call factory work, right? Once our method is, we just apply the same thing to whatever it is we're trading every single day, and you have consistency. And then, as I said, you gain confidence in what you're doing. So same story here. We got a mess up above. We've got the potential if this can continue to move up into that resistance area, and then we see what happens from there. The closer you get into a wall, so to speak, all these overlapping bars, well, then there's no void and the greater potential for a lot of jiggling around and so on. YM. A little bit different is, we've talked about the similarity between the patterns in these markets over the last couple of weeks. And then it's not always that way. Sometimes there's big differences between the patterns in these broader markets. And, over the last couple of weeks, they've been relatively similar, even the last month or so, where August was this sloppy back and forth, back and forth. The Russell was weaker, the transports were weaker, and then things kind of get back into alignment again. But we've got a similar story here as far as the retest and the pullback at support and the turn and double bottom and so on and so forth. So there's the Russell, and you can see on the daily that was not as straight up and down. It was more of a downward chop and then the reversal and, your pullback. And we talked about this yesterday with this W bottom here. Based on that type of a pullback, I said that I thought that this one was a better setup as far as a turn. If it could make the turn here, was a better setup for the turn. And they all moved up, but you can say this moved up quite nicely, straight up on the hourly. And so now we just see, can it continue what happened yesterday or not? Oil continuing to pull back here. You all know about the news of the Saudi and the bombing and the big gap, and now coming back right back into the middle of this range here. You can see all the moving averages are intersecting each other. It's all in the middle of this slop. Tried to hold yesterday, and so now we'll see if it actually does hold this reversal here and what happens. One of the themes from yesterday was to keep an eye on bonds or TBT, interest rate ETF, to see if it would go up. But what I said was this was coming into the sell zone area. And, you had the wider range bar pushing up into here. And I said, if this can turn lower, right, if this could actually roll over, then look for the markets to go up. As interest rates going down, that intermarket relationship has been working right now. There'll come a time where won't work so well. So intermarket relationships like this, they kind of, over the years can come in and out of favor. It doesn't mean they don't come back. So you always got to keep an eye on them. But this has been working now, keeping an eye on bonds. And if you don't have bond futures, you can use TLT. Right? You get gaps because of the bonds are trading overnight where this isn't, so it's got to catch up. But you get the idea. Push up into the 20 and this minor resistance area, look for the turn, and this turns down. That helps the markets. Then does the market actually turn up? So we have a bias based on what should happen. Then we actually see, does it actually happen? Don't we all wish it would always happen 100% of the time? Markets don't work that way. So here we got TBT had pulled back. That's the opposite of the TLT. And so we've got this reversal here today, and we'll see if it follows through. What may happen, right, is seeing how it's pulling back here a little today, is maybe we get a 1, 2, 3 type of continuation. Now, 1, 2, 3 continuations ideally happen somewhat more like this or on a breakout. This is kind of a breakout, but it's in a downtrend. But wide range bar, maybe today is a consolidation day inside bar. But we go back to our factory work. We got a wider range bar. Does today stay in the upper half of the wide range bar? We'll know at the end of the day. Or does we get a big red bar that closes down below? Bar by bar analysis. We'll see what happens. Gold is up here, but not a big deal. It came down real hard yesterday. This is the other market that has been moving opposite of equities, meaning equities go down, gold goes up. And equities went up, gold went down. So if this is going to go up, well, that's probably going to put a little bit of pressure on equities, but this is a type of a pattern. It's not a great pattern, meaning if this was down here where it broken down below the lows and we had this 1, 2, 3, that would be a good pattern to go lower. But an inside bar sitting on support, even it's got this void above, you got to watch out that this doesn't start creeping back up into here, because longer term, this is still in an uptrend, right? Not on the daily, but in a weekly, monthly, it's in an uptrend. And while it is a big red bar, this could start creeping as it's doing, notice that bottoming tail bar, and start moving up into this void. So we'll keep an eye on that. Silver, same story here. So same analysis, nothing more to go into. And the transports, we always watch the transports to see, are they moving with the broader markets? They have a tendency over the last, I guess, year and a half or so to move more with the Russell, meaning when the Russell shows relative weakness, so do the transports. And when they bring up the rear, so does the transports. And so now they've pulled back into this area where they should have turned, and they did turn yesterday, and we'll see whether they hold up here or not. So that's where things are at. Just looking at, we don't cover the VIX too much here, but just, doesn't give us any insights. Last thing I'm going to look at here, before I hand it over to Dan, because it's that time, is our internals. I didn't want to open up that big. And so we've worked off here where the wrong way option traders, right, they started betting big that the market was going to go higher, and we've kind of worked that off. It's at the upper band here. So that's a plus, doing better with that, and more put buying going on here. Breadth is neutral. The longer term breadth and volume is still in that upper area there, but I'm not so concerned about that. It's going sideways. So if we get more jiggles here, maybe this comes down lower, that, where we actually get a buy signal where breadth and sentiment would line up on the bullish side. So we don't have that now. So this is a somewhat of a positive that it's worked off from this mildly bearish setup right here. So we'll see how this all evolves. And so as we go into the today, and I guess, tomorrow, we're still dealing with a pretty high level of uncertainty, especially based on all of this impeachment news and so on. So we'll see how it all goes. All yours, Dan.
All right, thanks. Good morning, everyone.
You're really low. Well, maybe that's me. My thing is low.
The mic is low?
Yeah, that's better.
Well, because I'm talking louder. Remember I told you I was going to move it?
Yeah, yeah.
Well, okay, let me just move it back. And when I
turn the gain up, maybe turn the gain up on the back of it. I mean, my mic will pick up what's going on the other side of the house.
But yeah, this Dell computer, the keyboard is so much louder than my other Dell. So I can't explain it. All right, here we go. Yeah, McGraw. Yeah, we actually have a lot of gappers here today and leftover watches. So let me look at that first. And as Greg likes me to say, there's no problem children on our hands, so don't have to worry about opens. CTERP, this would have been a tradable, reversal, but now it's gapping under it, 30.73. And it's kind of too extended for me to initiate a new short, even though there's a price void on the weekly, unless it went sideways more or had a little breakout failure. But it's not a great short setup, even though it's a bearish gap. This is a bearish gap, but I don't like the way it trades in light volume. I'm going to get rid of you. SDC. They were just showing on CNBC some of the recent IPOs. So I looked at this one and I said, wow, Smile Direct, whatever the heck they do. Look at that, opened up at 2050. Wow. Levi was another recent IPO, which I like. I like this setup. I was going to do an October put spread under this bar, the 1815. However, it has earnings early October. But I like this as a little directional. This could pop to 20 bucks. This is a short watch carryover from yesterday. Alex mentioned it, and I like the pattern. NVIDIA, some of these semis had a nice reversal bar. So over yesterday's high, I like this as a put spread. I think this had earnings. It's a mess. I don't like the way it trades. It's a bearish gap way the heck down here, but I have no interest in it. Kook, bearish gap under 43 way down here. Look at all of this. This was a Bear Island reversal right there. See, this guy's up there all by him lonesome, and there's a window that you can drive through the left and the right. And now it's a bearish gap under this engulfing bar. Maybe a day trade, it goes to 42, but you know, it's fallen a lot here pre-market. CTL, I like this one over 13 bucks. It's had a big move here, which is going to be a breakout on the weekly. Look at the 20 MA flattening. We talked about that yesterday in MT Live. Now I have red bar, I have engulfing bar, I have red bar in the upper half, green bar almost engulfing. So this 5-6 bars is creating a bullish turn, and we also call that, I call it a minor bear sandwich. So I like that over 13. This it is an ADR, no interest. Full is a bearish gap, but as of yesterday, it was a bull flag. 100% retracement. Here's my 30-degree angle, but now the pattern's destroyed. I don't know, possible day trade short. Air, little gap breakout. Has room 48 to 49 bucks maybe. We'll check that out, 30-minute high. Per 966, gapping way down here. That had an incredible run on this little breakout here. And that's right where the 20 MA flattened out again with a higher low. That was your intelligent bottom fishing entry. McGraw PLMR as a secondary, but it's gapping up, McGraw. So that news is meaningless to me. Yeah, CCL has earnings gapping under 4, gapping way under here. It doesn't have a great price void, Fabio, because of all these overlapping bars in this breakout. So that, if you go down to a smaller time frame, that's going to be support on the hourly chart. So that's really my target right there. You see, so that's below 44s, but it already just hit 44.50. So does that make sense? I mean, 106.80. So this one has more of a price void, Fabio, because of this fluid move up. You see the difference in these? So this one, my target, you know, whatever, maybe 104. So you got more fuel in the tank for that one to go lower. KBH had earnings, but nothing to do with it. It's extended. There's Rite Aid, 839. So that's a bullish gap. This actually could be an intelligent, longer-term bottom fishing trade. That's worth watching. FTS, gap in a 2. Oh, that's an ugly, yeah, that's an ugly gap. So Fabio, here's on the weekly has a price void, but it's still a big gap. Because I was going to say, you know, well, ignore that one tail right there. But once, you know, once it broke this horizontal support, because of this big move from here straight up, this is a beautiful void. So then I would say target, you know, somewhere in there. I don't know, low 240s. Neil Jable. Yeah, I saw him. Yeah, he was up a little bit. Yeah, we legged into a covered call yesterday into strength. And we also moved the stop break even. Vive is a total mess. It's gapping to a mess. CAG earnings, 31 bucks. This was what I was hoping our kilo would do. Okay. Nice bullish consolidation, and there's a price void, you know, up to low 34s or whatever. So that one, this is worth watching. I'll put it over here. Oh man, it scares me. Hey, CAG might be helping our kilo. Remember, we've been sitting in this stock, folks, since this gap up day. Since 9/6, we legged into a covered call like 2 days later when it was breaking down here. So we're still getting paid. We're short the 65 calls, but to 30-minute high might be a day to leg out of those short calls. So that's a nice pattern right now. Let's put that here. John on YouTube's asking about Apple Condor. Now, Condor, we like, so this is not a great pattern, John. It's in a small trading range, but it's in an uptrend with rising 20, rising 50. So I would do it if it expired tomorrow, but I'm not sure you'd get any juice. In a Condor, as everyone knows, you would sell an out of the money bear call credit spread, out of the money bull put credit spread, and you would make time decay income with it just bouncing around range bound. We like wide consolidations with a flat 20 and 50. And we actually have one of those. John, look at this mess. So John, multiple reference points of major resistance. So we are short the 150, 155 calls. Multiple areas of support. We're short the 135, 130 put spread. For next week, we got like 98 cents a share for a $5 wide. Look at CAG here, upper right is failing. So this is what we look for in a Condor. All right, hope that helped. Let's continue here. Roku I have as a put spread watch over yesterday's high. This Anthem is still weak. I have in a window. Man, Alex got a great entry, and I missed it. That would have been a beautiful 30-minute low entry. Here's my 15-minute chart, so you can just visualize what the 30-minute low looked like, right? Here's 15-minute, 30-minute. It bobbled around, made a new high, and you would have shorted like right here.